Welcome back to the Energy Forum, a podcast from the Center for Energy Studies at Rice University's Baker Institute for Public Policy. I'm Ken Medlock, Senior Director of the Center for Energy Studies. Today's episode takes a closer look at the intersection of geopolitics and oil markets as tensions in the Middle East continue to disrupt global energy trade. In recent weeks, developments around the Strait of Hormuz have raised new questions about supply security, market stability, and the evolving role of the United States and its partners in maintaining open sea lanes. Global energy markets are already feeling the impact of supply disruptions and changing demand. To help unpack what's happening and what it means for prices, production, and the months ahead, I'm joined by Abhi Rajendran and Skip York, non-resident fellows at the Center for Energy Studies, and Kristian Coates Ulrichsen, fellow for the Middle East here at the Baker Institute. Abhi, Skip, Kristian, thanks for joining.
Thank you, Ken. Certainly a lot going on in the world of geopolitics and oil and more broadly energy markets, which are obviously now spilling over to the macro world as well. So Skip and Kristian, thank you guys for joining today. Skip, maybe I can bring you in just to kick off the discussion around just kind of taking stock of where we are now. Just on the back of President Trump's comments and an address, kind of updating on the conflict and where you think the next couple of weeks and the month of April will take us.
Yeah, so I think where we were, I would say prior to the president's speech last night was that if you kind of break down the flow of oil down into its crude components of, say, call it 15 million barrels a day and then 5 million barrels a day of product, that over the course of the month of March, countries inside the Persian Gulf had figured out a way to kind of replace about 50% of the crude flows by increasing crude flows toward, Saudi Arabia increasing crude flows down the east-west pipeline towards Yanbu, UAE bypassing the Strait of Hormuz with their pipeline. We've got a bit more oil flowing through the CPC pipeline out of Iraq into Turkey, but that's not a big volume. And we still have some ships that are transiting the Strait of Hormuz are predominantly Iranian or Iranian approved vessels, but you're still measuring things, and we are sort of starting the month at 4 or 5 vessels a day. I was just looking at a ship tracker this morning that kind of says that on April 1st we moved that 14 ships, not all of them tankers, but 14 ships moved through, transited the straits on April 1st. So we've been able to replace about half of the crude. That's still, there's still a big number out there, of volume that's being lost. But the real pinch that we're seeing, and we're starting to see this in Asia, and we're going to start seeing it in Europe, is on the product side, where the pre-crisis tankers have now delivered. In fact, the Financial Times is reporting this morning on April 2nd that the last jet fuel tanker coming into the UK out of the Middle East is tying up and unloading like as of today. And then so now the question is, what's Europe going to do with replacing that jet fuel, replacing diesel, both of which Europe is kind of depends about somewhere between the neighborhood of 15 to 20% of their jet supply comes out of the Middle East, and about maybe about 10 to 15% of their diesel supply comes out of the Middle East. So these are big pinches that are now starting to happen, and they're starting to happen in real time, because products were volume that was going straight into the market, not having to go process through a refinery. So I think the month of April, as we're shaping up, April is the month when, March was the month where adjustments were being made. They've been made, including crude, the SPR releases. And now April is where the world is really going to start to feel the real impact of losing the Strait of Hormuz in the month of March, because that supply chain is now completely broken. And I think, going back to your comments, that what the president did say last night was that we're looking at another 2 to 3 weeks of military activity in order to achieve his 2 strategic objectives, which was dismantling the nuclear or disabling the nuclear weapons development program, and then limiting Iran's ability to harass its regional neighbors through ballistic missiles and proxies. He did not say that reopening the straits was one of his strategic objectives. And in fact, what he actually said was, the Strait of Hormuz is strategically more important to parts of the world other than the US. And, kind of, he's talking there about Europe and Asia. And so it was a call on them to step up and facilitate some sort of navigation of the Strait of Hormuz. So I think April looks to be the price movement we saw on the president's speech. It went up about $4 a barrel while he was speaking. The London market went up about $4 a barrel during that 20-minute speech. It's now gone up about another up to about $7 a barrel. So we're up about $7-8 a barrel from where we were on Wednesday's close. And I think that's a precursor of what the month of April is going to look like. I think from a price environment, price levels get worse from a consumer's perspective. Prices go higher, and I think they start becoming more volatile, because if he holds to his 2 to 3 week timeline as they're starting to wind down the military activity, I think there's going to be more uncertainty as the market is, well, what does that mean about the Strait of Hormuz? And I think we could see not only elevated prices, but much more volatile prices as we move through April.
Yeah, I think that tees it up really nicely, Skip. And we'll come back to touch on oil markets and some of those moving parts in a bit. But Skip, since you mentioned some of the disruptions and also the regional neighbors and and maybe on the demand side, the worst of the disruptions are to be felt, but certainly on the supply from a production standpoint, there have been some pretty severe impacts already being felt by kind of key GCC producers. So maybe Kristian, I can bring you in here just to kind of talk about what's been kind of the set of key adjustments from the Middle East so far. What is the thought process here? As we look to the rest of May, and then the Middle East, in particular, some of the key OPEC member states, tends to kind of think much longer term, right, than just a couple of weeks or a couple of months. What are some of the key kind of longer term things that you're focused on?
Yes, thank you. I think certainly from a Gulf states point of view, they will have listened to President Trump's speech on Wednesday evening, and it will have confirmed in their assessment that a conflict that began with a days, if not weeks, mentality has now morphed into a weeks, if not months scenario, with no clear picture either of a viable end game or for what the critical issue for the Gulf states, apart from the threat that Iran poses in terms of missiles and drones, is the Strait of Hormuz for oil and gas exports, and all the other commodities have now been disrupted. And they will have noticed that lack of focus, well, certainly that statement by President Trump about the Strait of Hormuz. And even though that may have been aimed more at European and Asian states, it clearly has probably the greatest impact on the Gulf states from a revenue point of view. And they can certainly have buffers to kind of get over a few weeks or a month or two of disruption. But I think the assumption now is that this is going to continue at least through April, probably into May, possibly longer. And of course, we're also now beginning to approach the hot summer season. So countries like Kuwait, for example, which have had to severely cut back oil production with associated gas production, have also had, I think, disruptions in LNG imports from Qatar, will begin to face a surging demand, which always happens at this time of year. So and this is also true of countries like Egypt more broadly, which also has faced a restriction of gas imports from Israel. So there are also other factors at play which are beginning to loom over the horizon. But certainly from a Gulf point of view, the concern will be that there doesn't seem to be a viable end point, that there's a concern, I think, especially in the UAE, Saudi Arabia, that possibly more the UAE from recent comments to media, that on the one hand, there is utility in striking Iran and degrading Iran's ability to launch missiles and drones against its neighboring states. But there is a balance, because Iran is still able to do that even after 4+ weeks of heavy bombardment. And any escalation, should the president seek to escalate to de-escalate, as the term has been made, they would once again, the Gulf states once again would be put in the firing line. And there has already been enough damage to the soft power image of the Gulf as a safe haven, a place to live, work, do business, for investor inflows. We had the Saudi Arabian Foreign Investment Initiative meeting in Miami at the end of last week. President Trump spoke there, somewhat unflatteringly about his Saudi hosts in one part of his speech, but certainly trying to project an image of a business as usual. But I think the longer this goes on, and now there is an assumption it will go on longer than a lot of people may have anticipated, that business as usual impression becomes far harder to sustain. And of course, for countries like Qatar, which have obviously faced a shut-in of LNG production, which has remained the engine of the Qatari economic growth, to say nothing of the strikes on Ras Laffan on the 19th of March, which have now taken out, I think, 17% of LNG capacity. Now, these are extremely heavy hits they're taking. And while the president has continued to support the Gulf states, saying they're great partners, although he's made no mention of Oman, interestingly enough, he singled out the 5 of the 6 Gulf states, plus I think Egypt and Jordan, but made no mention of Oman in his statement last night. He has a feeling, I think, of frustration that Trump continues to say the Gulf states are being great partners, they're taking lots of hits, but they don't see any action that would actually alleviate these very pressing economic and energy disruptions that are really going to, as Skip said, the longer this lasts, the more damage that will be done.
Yeah, no, I think that's that's really useful color and some really important points. And maybe one more I can ask you on is, is just like, just kind of the restart process, right? I mean, I think by my estimate, we've easily seen shut-ins over 10 million barrels a day in the Gulf. That number may actually be creeping up to like 11 or a little higher than that right now. Should the conflict, kind of wind down, and of course, a lot of this is kind of contingent on the pace at which flows can normalize through the Strait of Hormuz. How do you think about, kind of the ramp up process from the Middle East from a production standpoint? Is it a week's process? Is it a month's process? How are you thinking about that?
Well, I think the concern is that any ending of the conflict, any ending of the Israeli and US military operations against Iran, if it's not accompanied by an immediate reopening of the Strait of Hormuz, or at least the threat of Iranian action that will continue to deter insurers from covering shipping through the strait, that will make it even more prolonged process, and they take months, if not, well, certainly not weeks, but months. Of course, the LNG capacity in Qatar cannot just be simply restarted. That will be a process that will take weeks, if not months in itself. But the passage of shipping through the Strait of Hormuz seems to be now decoupled in the president's mind from an end or from some sort of resolution to the military side of the conflict. And I think that is going to be of the deepest alarm to Gulf states. Obviously, Saudi Arabia with the East-West pipeline, UAE with the Abu Dhabi crude oil pipeline have some limited alternatives. That again is contingent on no escalation from the US, leading the Houthis in Yemen to really join the conflict in a big way, which they have started to move towards, but haven't yet started to try to do what they did to Red Sea shipping between 2023 and 25. And that could really be an escalatory card that Iran and its proxies hold. And again, that is probably the nightmare scenario for the Gulf in terms of trying to balance move towards an end to the conflict with a potential escalation that could have these uncertain consequences.
Thanks a lot, Kristian. Yeah. Skip, you were going to chime in with something. Go for it.
Yeah, I was going to say, as I think about this, I'm thinking of a 4-step process, and I think Kristian's laid out something that's a really important strategic risk, which is the decoupling that apparently President Trump is making between the military conflict and the Strait of Hormuz. Because I think we were thinking prior to this week that those two were synced up, and that as the military conflict ended, some sort of resolution to reopening the Strait of Hormuz would also emerge. I'm not sure that may happen now, but if it does, it sounds like it's more of a coincidence. But I think there's a 4-step process. There's a step number 1, is the first thing that's going to happen is a damage assessment. Now we've heard like Qatar is saying that the damage at Ras Laffan could take 3 to 5 years to repair. Everybody ought to say that's a preliminary estimate, and let them, don't be surprised at if the Qataris, when this all resolves and they get a chance to go in there and actually really look at the equipment and the damage, that 3 to 5 year number might change, and it could change in either direction. So I think you're going to do a damage assessment. I think the next thing that has to happen, and this is what's critical for the global energy markets, is you've got to bottleneck the Strait of Hormuz. You've got to reopen the straits, and you've got to get that ship traffic moving, because you really can't bring the 10 million barrels a day of production back online until you start emptying the tanks at the loading terminals. And that's why that logistical debottlenecking has to start, and that doesn't have to be completed first, but that's got to get underway. Now, some shipping people that I've talked to is that they're saying that takes 100 days. So they said from when the straits reopen and ships start testing that they can safely traffic, and then they can safely transit the strait, they said it's about 100 days to debottleneck the system. So I think that step 2 is debottlenecking the Strait of Hormuz. Step 3 is now you start returning production. But I'm curious what you and Kristian both think about this. I don't think you bring back that production as fast as you shut it in, because it's easier to sort of bring operations down than it is to recommission them, and that's going to be a longer period of time. And that's kind of the fourth step is actually repairing the damage, right? So we did those damage assessments in step 1. We start returning production, but some of that production isn't going to come back until we complete some repairs, and that'll be to get the strait, or get the Persian Gulf back to that 15 to 20 million barrels a day of liquid volume moving through the straits, plus the 20% of global LNG supply coming back through the states. You've got to complete all 4 of those steps, and I think each one of those is going to take longer than people are anticipating, like right now in early April.
Yeah, I think that's right, Skip, and I think I would say that as Kristian pointed out, the LNG piece of that is probably going to be the longest to recover, because there is certainly some multi-year sort of damage for Qatar to work through and then bring back. But I think to your point, between shipping, logistics, and just kind of the restart process. And by the way, as the kind of the war initially broke out, right? And the first thing that many GCC countries was to kind of fill up their storage before, as they were kind of cutting production. So some of that storage will also have to get kind of flushed out. So I think we're looking at like somewhere between a 2 and 4 month process. As things start to normalize between flows and production, and everything else in between, and it could stretch even longer than that, right? Depending on the market kind of testing things out and making sure everything is working. By the way, including insurance and some of those other ancillary markets as well. We've got a couple of minutes left. I think the one last thing I wanted to kind of touch on is what are some of the kind of the key moving parts with the oil market that you're thinking about. We just started the second quarter, but let's say the second quarter, third quarter, and through the end of the year, on demand and on prices, as the supply side kind of gets sorted out. Skip.
Yeah, I think for me, I think you kind of highlighted it as we're moving into the second quarter. What I'm most concerned about right now is that the first month of this conflict happened during a shoulder month in oil demand. Oil demand globally kind of surges in the second and third quarters because it's driven largely by the summer season in the northern hemisphere. And so March was sort of was a shoulder month in demand. We're now going to start seeing that seasonal swing returning. So in addition to whatever you thought oil demand growth was going to be, we're now going to have this seasonal swing coming. So in some sense, March was as good as it gets in terms of that supply demand balance, because we had tankers on the water that could still get to their outside that had transited the straits that could get to their destinations, and we were sort of in a shoulder month for demand. Now we're heading into stronger seasonal demand, and we don't have that supply, and that supply chain is broken. So that's why I think April starts to look. That's another reason why April starts to look worse than March did. And then it goes back to the unwinding. Even if all this goes very smoothly and we get some sort of resolution and the straits reopen and the debottlenecking happens, as smoothly as we expect, that seasonal swing is going to continue to put stress on the oil supply chain I think through the second and potentially even all the way through the third quarter. So we could be into the fall before we really start to see a market that has sort of starting to heal its wounds from what happened in the month of March.
Yeah, totally agree. And I would just add, yeah, I mean, I think, in the second quarter, like you said, April could be the worst in terms of, the demand side having to, deal with shortages and, kind of, literally just ships and cargoes drying up. And it's not unreasonable to think that, the second quarter is, from a demand standpoint, is down materially year over year. Maybe even in the multi-million barrels a day sort of range, and then pick back up into the second half, as you pointed out. And the other piece of it is just the the sheer amount of inventory drawdown that we're going to see as a result of this. I think should the conflict, let's say, wind down by the end of April, and May is the month where things attempt to normalize. You're still looking at a lost oil supply out of the Gulf that could be somewhere in the 7, 8, 900 million barrel range, maybe even pushing up to 1 billion barrels of the market having to lean on inventories just to meet consumption, and that's a pretty significant amount, which means that with that amount of kind of buffer and the system lost, on the back end of this, when things do sort of normalize, you're probably looking at a market that cannot really kind of settle back into the 60s, and even getting back to the 70s in terms of price may be tough. And so we may be really looking at a price environment that's 80s plus for some time, even at the back end of this conflict, and that's also going to be challenging for kind of demand to kind of normalize, and could take some time. Anyway, I think we're just about out of time. Skip, Kristian, I wanted to thank you both for joining. Certainly, we'll be kind of monitoring the situation closely over the month of April, just to see what some of the key moving parts are. Both from a market perspective, but also from a Gulf region perspective, and then how the individual countries are going to be kind of coping with the recovery process, which hopefully we will get to at some point. But thank you both for joining, and we look forward to the next edition of our discussion.
Thank you for tuning in. Follow the Energy Forum and the Center for Energy Studies for more insights on global energy trends. This episode was produced by Maram Hijazi. Stay productive and never stop learning. Until next time, I'm